Remember in my other example, the 15 versus 30 saved $86,000. And we're not talking about chump change here, people. We're talking about a lot of money. Hi guys, welcome back to your one-stop shop for anything and everything mortgage education. I post new videos every Tuesday and Saturday. If you want to know more about mortgages and learn how to save thousands and thousands of dollars, you've come to the right place. Mortgage acceleration. So by the end of this video, you are going to learn the how-to and the what does that look like, and I'm going to give you case-by-case studies with specific numbers and breakdowns to help you understand and further know all the options with regarding to accelerating your mortgage. Hi, I am Stephanie Weeks. I've been recognized in the top 1% in the nation for loan officers out of over 300,000 of us. I have helped thousands of clients with millions and millions of dollars in mortgages. I'm also the author of the best-selling book Mortgage Piece, and soon to come, the course Mortgage Piece. As promised, I'm going to give you clear examples using hard numbers on how acceleration works and give you some specific information to learn from and to work with. What are some of the main reasons that someone might want to accelerate their mortgage? How about saving money? Oh my gosh, you can save tens of thousands of dollars. I'm going to show you that in some of my examples today. Another reason might be stress. You know, wouldn't it be so much less stressful if your mortgage was paid off early? I mean, can you imagine that feeling, how wonderful it would be? Some people want to pay off their mortgage early to free up additional monies to go finance other properties and maybe build wealth through real estate. That's another great example of why some people might want to accelerate their mortgage. Another example might be early retirement. Maybe the sooner you pay off your house, the sooner you can retire, and that is going to be super, super cool. That's something people work for all of their lives and a wonderful spot to be in, and that could be one of the reasons why you want to accelerate your mortgage. Now that you know why some people might want to accelerate their mortgages, let's get into the nitty-gritty, and I'd love to give you some specific examples and strategies of how you can do this, since we now know the why. One thing that you can do is, of course, refinance. That's the first thing that comes to a lot of people's minds, and that is an option, so we're going to talk about it, but that's just one little piece that we're going to talk about today. So one way to accelerate your mortgage is to refinance to a shorter term. Let's say that maybe you have a 30-year loan and you're only a couple years into it. Well, maybe you want to refinance to a shorter term, such as, did you know that mortgage terms can be 10, 15, 20, 25, or 30-year loans? So if you're on a 30 and maybe the rate's going to be better or put you in a better situation, and you can get a double bonus of shortening the term or amortization when you do the refinance. So of course, if you do a 20 or a 25-year versus a 30, that's going to accelerate paying off your mortgage quicker. That's just one of the examples today. So there's so many different ways to accelerate, and these are some of the ones that I love that I want to show you the differences of what you can do, what it looks like, and if you can get the same results. So of course, there's a million different scenarios we can go through. I'm only giving you one today, but I'm going to show you different aspects of the scenario. So what I'm talking about in this first example is a $250,000 mortgage. I'm going to, compare that from a 30-year option and a 15-year option. So of course, in order to do numbers, I need to give you guys rates. I am not quoting anyone rates. There's so much compliance that goes around rate quotes, and so that's not what I'm doing today, but I have to have rates to do these comparisons. So this example is a 30-year loan at an interest rate of 3.25% compared to a 15-year loan at an interest rate of 2.75%. Most of the time, and there's always exceptions, especially with the market being so different or abnormal right now, shall I say, a lot of times the 30-year is about 0.5% higher on the interest rate than the 15, but I've seen that be more and I've seen that be less over these last 16 years of being a loan officer. So I'm going to use the 0.5% in the comparison for today. So let's say that you did the 15-year, and by the way, I would love if you would get pen and paper and write this down, because I'm going to go through it. Don't get me wrong, but it just is so much more absorbed, I find, when you actually write down these numbers and look at them on using pen and paper. It's like, wow, so mind-blowing. Now, What if you thought, well, what if I take the 30-year option at 3.25%, but I want to pay it off in 15 because I don't want to spend the money on a refinance? Well, what does that look like? Let's dive in. A 30-year loan, remember, at 3.25 was $10.88 a month, and you were going to repay $392 over the 30 years. Now, if I want to accelerate that same loan without refinancing, 3.25% interest, $250,000 loan amount, instead of $10.88 a month on the 30-year, you're going to pay $17.56 a month plus your escrows. Now, $17.56, remember, if we took the 15-year option, that payment was $16.96. So you'd have to pay $17.56 a month to get the house paid off in 15 years instead of 30 if you kept the same rate. However, what does that look like? Do you still save as much money? Well, logically, no, because the rate's higher, but let's use some hard numbers. $17.56 a month compared to $16.96 if you had just started out with the 15-year loan. You would repay $316,200. And remember, you were going to pay $305,300 if you took the lower rate and the 15-year term from the get-go. Now, let's still compare that though, because at 3.25, the 30-year was $10.88 a month. You were going to repay $392,000. And now, if you kept that loan, made 15-year payments to accelerate that mortgage, we know the payment would be $17.56. Instead of paying back $391,685 in my 30-year option at 3.25, you'd pay back $316,200, as I mentioned. So you'd still save $75,000 if you didn't refinance in this example, but made the extra payments to pay it off in 15. So you'd still save $75,000 from the 30-year cost, but it's going to cost you around $9,000 more than it would have if you took the 15-year option. Wow, that's a mouthful, right? And hopefully your head's not spinning, and that's why I asked you to get a pen and paper to kind of make sense of it. But I want you to see the difference of, in scenario 1, I gave you 15 versus 30 from the get-go, different rates and everything. In this scenario, I'm showing you what if you got the 30 and then decided, hey, you know what do I need to do to knock this out in 15? What will I need to pay and how much money will I save? Hopefully this has been helpful. Stay tuned for some more examples. Another strategy would be, what if you put extra money in your savings account whenever you could? Maybe you got a bonus, or maybe you got overtime, or maybe your grandma gave you some money for Christmas. And so maybe you decide to put money in your savings account anytime you can, and then once a year, make a principal reduction to your mortgage. That would work as well. Absolutely. I want you just to consider, what's your mortgage rate versus what are you making on that money? Here's another strategy. I like it. I think it's easy to remember, and hopefully easy for you to do. Let's say that every single year you get a tax refund, and every single year you get however much money, and you've got any amount. I don't care if it's $100, $1,000, $10,000. You've got extra money every year consistently from that tax refund. You get it once a year, and you don't necessarily have that money earmarked for something else. How simple would it be? Make a plan in your mind. Refund, principal reduction to my mortgage. Refund equals principal reduction to my mortgage. That's another quick, easy strategy. It's not easy to forget, real easy to remember, and it's another thing that you can do to save thousands and thousands in interest and accelerate that mortgage. There are some people that choose to do bi-monthly mortgage payments. Bi-monthly. That's sometimes done through your mortgage company, and sometimes that's done because you just do it yourself, right? So maybe you took a mortgage payment, got a month ahead, and then decided from there, twice a month, I'm going to send in half my mortgage payment so that I'm never behind and I'm always ahead, and I'm making extra payments. Let me tell you how to do that in case you want to do it yourself and not through your mortgage company. So in this example, the mortgage is $1,500 a month. You would take $1,500 a month and you would times that times 13. Why 13? Because your point is to make an extra payment a year, which is why you're doing this kind of breakdown in your payment. So 1,500 times 13 divided by 24, because you're making bi-monthly payments. In that example, you would pay $812.50 twice a month. And your result is you're making an extra mortgage payment every single year and accelerating your mortgage. That is the bi-monthly payment option. Okay, hopefully I'm not boring you like crazy, but it's such good information. I mean, my gosh, you should be in control of your money and you work hard for your money. So you want to save every dollar that you can and you don't want to make any assumptions when it comes to your mortgage. So let's give you another example. What if you took that 30-year loan at 3 1/4, $250,000 loan amount, and you did not want to repay $391,000 or $392,000, and you wanted to accelerate that payment, but the 15-year was a little bit too much because it was too high of a jump in the payment. So what might be a happy median? And maybe you don't want to refinance, so you want the comparison at your same interest rate. 20 years would be $1,417 a month plus escrows instead of the $1,088 that the 30-year was offering. You would repay $340,317 instead of $391,685. You would save $51,368 if you accelerated your own mortgage by trying to pay it off on a 20-year amortization instead of the 30, and didn't refinance, so you still had that 3.25% interest rate. Pretty interesting, right? I mean, these are different things that you can use, different strategies that you can use to accelerate your mortgage. There are so many ways to do that. I'm going to have a few more examples, so stick around. Okay, so we've looked at a 30-year mortgage versus a 15. We have looked at what if you take the 30, but then decide you want to pay it off in 15. What do you have to spend? What do you end up saving? Then we looked at what if you got the 30 and then wanted to pay it off in 20, what would you have to pay? What would you end up saving? So I've given you all those things as different options for accelerating your mortgage. So there are other strategies, right? There are several other strategies. One other strategy would be making extra payments every month. So one example, just round up. What if your payment is $1,280? Just send in $1,300. Make sure that you are allocating that additional to principal, not to escrows, to principal. Or what if your payment's $1,375 and you can afford $14? Round up. Every dollar that you can pay is immensely helpful in accelerating that mortgage and saving you thousands in interest. Remember, in my other example, the 15 versus 30 saved $86,000. And we're not talking about chump change here, people. We're talking about a lot of money. So roundup would be another method that you can use to try to pay your mortgage off sooner. Don't make it complicated. Whatever works for you, do it. Whatever way that you can accomplish paying off your mortgage early, however you can simplify that, do it. Okay, you ready? I hope you're ready. I hope you have your pen and paper. Okay, so a 15-year mortgage, a $250,000 loan amount, 15 years at 2.75% interest. That is going to generate for you a monthly principal and interest only payment. This is not escrows. A monthly principal and interest only payment of $1,696. Okay, so over the 15 years, that $250,000 that you borrowed, you are going to repay, if you don't accelerate it, you're going to repay $305,379. So let's just round down in this example to make it simple. So you've got $1,696 a month. You borrowed $250. You're going to pay back $305 on that $250 over 15 years at 2.75% interest. Now let's compare that same loan on the 30-year. So 30-year loan, 3.25% interest, $250,000 loan, principal and interest payment $1,088 a month, repayment if you don't accelerate over the 30 years is $391,685. So let's round that to $392. $1,088 a month plus escrows, of course. $392 repayment over the 30 years at 3.25%. So yes, the monthly payment is a lot more, of course, because it's over a shorter term, but if you notice, it's not double. A lot of people think, wow, it's going to be double if I do 15 over 30. It's really not. So it's $1,088 on the 30 compared to $1,696 on the 15, so not even double, which is pretty cool. And the 15-year option, if you took that to accelerate your mortgage instead of taking a 30, you would save over $86,000, which is enormous. But even more than that, can you imagine having 15 extra years with no mortgage payment? God, what a peace of mind. What an amazing accomplishment. So you've got the monetary savings, but you've also got that just, wow, that pride, you know, of accomplishing that. So that's my one scenario I want to run through. I'm going to go through a few different examples, so stay tuned because you're going to want to know, what if I don't refinance and I just take that 30-year and I want to pay it off in 15? What does that look like? It's going to be very different than if you just did the 15-year term. Okay, so we've done the refinance to a shorter term option. We have looked at accelerating to a shorter term on your own without refinancing. We have looked at rounding up every single mortgage payment. We have looked at the tax refund method. We've looked at the bi-monthly method, and now we're going to talk about the bi-weekly method. So bi-weekly is different than bi-monthly. Here's how you figure it out. We're going to use the $1,500 a month, just like in the last one, just so you can clearly see the difference. So you would take $1,500 times 13. Remember, the goal is to make the extra mortgage payment a year. So 1,500 times 13 divided by 26, not 24 like we did with the bi-monthly, divided by 26 means every other week you're going to pay $692.31. I'm basing this on principal and interest, okay? So double check your escrow, don't forget about all that. And that is how, on that example, you can actually pay bi-weekly and end up paying one extra mortgage payment a year, accelerating your mortgage. For more freebies as far as checklists, other potential videos, information on my upcoming course, Mortgage Peace, please do subscribe to my website or through my website, stephanieweeks.com, and there's a bunch of free stuff that you can have access to. Now, hopefully you are feeling empowered, and I'd love to hear from you. So in the comments, please type the word when if you plan on utilizing some of these mortgage acceleration strategies. Hopefully by now you've subscribed to the channel and shared it with all of your friends. Please, I really appreciate the shares as well. I'm going to post some other video links here if you'd like to check out other videos, and let's connect on social media. _the real Stephanie Weeks is my Insta handle, and my website is stephanieweeks.com.